Hello and welcome to the Froggy Five podcast. I'm Jim Fralick, your host. I'm founder and managing member of the Froggy Companies, and I'm happy today to be joined by my good friend, Colby Bowers. Colby is a 23-year veteran of the U.S. Air Force. He served with distinction. He's a combat medic who is also a wounded warrior. And Colby, for purposes of us here today, Colby's been investing in real estate since 2001, so a real long time. And he's been doing it full time since 2017. Colby is co-founder of multiple companies, including the Sentinel Equity Group, Veteran Pride Investment Group, and a nonprofit. And the latest is he's co-manager of the Froggy Fund I, which we just started together. So happy to be doing that with Colby. And he's amassed over 1,700 rental units in that space in 6 states. Colby's an educator. One of Colby's mottos is profit for purpose. I might have messed that up. Colby on his profits with purpose. Either way, he gives a lot to veterans and first responder that's near and dear to his heart. And he's just involved in a lot of different things. So Colby, really happy to have you here today. It's been like 5 years since I interviewed you on my last podcast. How are you?
I'm doing well, Jim. Glad to be here as always. We talk all the time, and it's always a pleasure to talk shop.
All right, we're going to get right into it then, Colby. I've got part of the Froggy Five is like 5 areas I try to cover during a podcast, but we'll see what we hit. I want to jump right in first with how you got started in real estate, what you may have had to overcome along your journey as an investor and a manager, and then what motivates you, which I know there's a lot of things I know a lot about that part of you. So give us a little bit.
I've been investing in real estate for a long time, since 2001. Got in it a little bit by accident while I was active duty, deploying a lot right after September 11th. Instead of going out and buying a new vehicle, kind of like everybody else that tends to do in the military, after deployment with all your tax-free, I always wanted to invest in real estate and had an opportunity to buy a house just down the street from the one I owned. So I jumped at it and turned it into a rental. And really that was the start. Fast forward 5 years, when I left that unit and deploying all the time, I had 10 rentals. Again, most of those single family, started, kind of on the residential side where everybody does, and doing a little fix and flips. And did that throughout my career, off and on. And then once I retired, I always knew I wanted to get into bigger projects and stuff, and jumped into the multifamily piece, like you said, 2017, and haven't looked back. 1,700 doors later, 5-6 states, full cycle on number of projects. Started a couple funds. Starting a fund with you, the Froggy Fund, which I'm very excited about. So I mean, I'm living and breathing real estate, and I love it.
You got addicted to it, and now you're in to stay. So, given all your experience with management, I know you teach and educate people as part of that program you do with Rod Khleif. In managing these things is not really my forte. I've been doing mostly ground up the last several years. I started full time into it slightly after you. I'm wondering what your thoughts are on the technology front. I know you're not really a big technical guy, but you have to use a lot of technology. So whether it's in your business with all these properties or just your viewpoint of the industry as a whole, what's a technology you see emerging that's going to change our industry or have a big impact on your business?
Yeah, that's a very good question. A lot has been happening, as probably you and your viewers know, in the last couple of years with AI, right? Artificial intelligence. Everyone's chat GPT in it, answering questions, doing homework, apparently, writing blogs, things of that nature. Those are also great help. And you're right. I'm not the most technologically inclined, but I'm all the old adage is surround myself with people way smarter than me. One of my partners in Sentinel Equity Group, Rob, former Marine, is a 30-year IT guy. And so really he's driving it. I'm supporting it how I can, but we're leveraging AI. He's building out a system. We're trying to leverage it for underwriting.
Oh, really?
How
Okay.
can we, be more efficient, quicker, find more deals, and improving our processes. And so, we're trying to leverage that AI as we can. We're in the very beginning stages of it, but very promising results, and we're kind of excited to see what we can do with this, in the coming years, and might be another business opportunity coming down the line.
Yeah, I think so. I think it makes sense. Jake, my youngest son, works with me. He's been working on something for us along the same front. There's probably going to be several versions of it out of there. We've looked at different third party operators in terms of templating this data. As you know from doing tons of underwriting, these offering memorandums come in and they're all in different states. So that's the key. I
Yeah,
know from my background, which is systems engineering and doing a lot in the military, where we had these um, challenges with free text data and form fields, and we're kind of like message traffic, right? 9 line, whatever. If it's standardized, then you know how to deal with it. Once you get outside of that, you don't. So the more we have standardization of underwriting templates, the more you'll be able to grind through that, I guess, and use AI technology. Like you said, it is definitely buzzword of the day, and automating Monday task will be, just create another level of competition, right? It's the people who are using it and automating quickly are going to be seeing deals quicker than others. So,
right.
well, good luck with that. I'll be interested to see what St. Luck comes up with that. So, I want
Thanks.
to get into some deals now, and give us a hard lesson you've learned along the way, because I know you've learned a few probably, and what you may have done to change your business to not make that same mistake again.
Trust but verify is probably my biggest lesson learned, starting out when I started to do this full time remotely. Because I live in Montana, as you know, but I invested around the Sun Belt. I purchased a property and we had it contracted, or excuse me, had the contractor on site doing work. Figured we had all the safeties in place. Hey, we want to see videos, we want to see pictures before we pay invoices, things of that nature. Want to make sure that work was being done. And we were getting pictures. We get some video, wasn't the best. And pictures were like, it just we weren't getting the whole picture, figuratively and literally. Come to find out, we went to uh, put the property on, and this was a fix and flip, but like a multi-unit. Went to put it on the market, and our broker went over there to look at the property, take some pictures, called me up and was like, "Hey, Colby, yeah, this place is not ready." And I'm like, "What are you talking about? We got all the pictures. It's done. It's ready. Move in ready." She's like, "No," and send me some pictures. One I remember that kind of really got my blood pressure up was picture of the bathroom. The cabinet drawers under the sink wouldn't close because when they put the cabinet in after putting in the pipe, the doors wouldn't close because of the way they ran the drain pipes and stuff underneath. The
Wow.
pictures I got, again, not getting the whole picture, was a view that made it look like the doors were closed and everything was looking good. So that was one of many. There was a bunch. Long story short, um, my investors made money, but my partner and I did not on that deal. And so now we get a third party, either like our broker, somebody that has our best interest, is boots on the ground that will go and actually verify what we've already kind of verified through pictures and stuff before
Wow.
we pay invoices and all this. So I lost about $20,000 in that deal,
Ouch.
contractor, because we had to go back and hire another contractor to redo some work. And then obviously we had, delayed timeline. So, some opportunity loss and such, that holding costs and things like that. Um,
Wow. Well,
so, but
that's a good lesson learned. That's a good seminar you got there on that.
yes,
I've learned
and I'm
similar
thankful
lessons.
it was early in my career. It's kind of fail early, fail often, and learn from them. So
Yeah, the amount of people that are willing to be deceptive can be discouraging out there sometimes. It's
Yeah.
like running into that, I can imagine. So so now that we have one of your sad stories, I'm going to shift gears and let's get happy about the best deal you ever did. Either it doesn't have to be the most profitable, but tell us about something that you're really proud of that you've accomplished and maybe gone full cycle with or whatever.
That my very first commercial deal that I did from start to finish. It was a little 15 unit in Arkansas, and I bought it in December of 2019. March of 2020, the world shut down. So, trying with all the COVID restrictions and everything going, trying to do a complete gut remodel. Again, it was kind of a lot of I love it, seminars, a lot of lessons learned, uh, mistakes, but a lot of stuff is really the mistakes were minor, but obviously, who kind of can plan for a pandemic, and then the world shutting down. That was the biggest challenge. And what makes me proud is 2 years later, we ended up selling. Um, so again, it's another one I didn't make money on, but my very first deal, large deal, but I I survived the pandemic. Went full cycle. Again, something I'm still proud of to this day is, yes, I'll make mistakes. We're all human. I'm gonna make mistake tomorrow. I'm gonna put a dish in the wrong place. My wife's gonna get mad at me. So, I'm just real estate. But it I'm really proud of is that my investors have never lost money. And that goes back to my first deal, and I always put my investors first. But yeah, that first deal, even though I wouldn't say it was a failure, it was a success for what I had to overcome and the challenges involved. And I was able to walk away. I didn't lose money. I didn't make anything. Space I worked for free for 2 years, but
Good.
um, I'm proud I stuck it out and
Yeah,
came out the other side, full circle, and I'm still here. So
just another layer of resiliency. That's a good one. Yeah. Surprised me a little bit. I usually expect like would expect to get the most profitable deal like the last couple that you just went full cycle on, but I could see what you're saying because when you've had all those tough lessons and overcome them like everything else in your career, that's just another you create another tool in your toolbox to overcome the next event, to problem solve.
right,
What I've noticed kind of along those lines over the last 5 years, more than anything, and what we're obviously in agreement on looking for in sponsors for our upcoming fund, only dealing with people that are transparent, dealing with people that are good problem solvers. Because that's really when I'm talking to sponsors, what I ask, like, tell me something that you had to overcome. Because if somebody's giving you all green lights, like everything's been great,
right.
they can't miss, then that's a big red flag because okay, at the end of the day, something's always going to go wrong. Nothing ever goes. It's like planning for a military mission, right? So things are going to go wrong right away.
Yeah.
But how people problem solve is a good indicator of how they're going to problem solve in the future. So glad you got that one under your belt. So what I kind of want to close out with is something that's not as exciting as the best deal ever, but it's something that's critical and I don't think people get enough of on this front, and that is just financing, like a drill down on financing. And what I want to ask you is like what you're doing to overcome the hurdles of financing today that we all know and experience, whether it's a debt or equity, or something you've done creatively, either what you're doing there or something you've done creatively to to accomplish something in the past with real estate.
Yeah, especially these days, like you said, financing, especially debt through banks and stuff, is a little bit more challenging, just with inflation, higher interest rates. Trying to get the numbers to work. Um, I mean, it's what you and I are doing. We're starting a fund that we can collectively have money pulled together and ready to go when those opportunities come about. And I think the other thing that's great about having a fund is, it allows the investors to diversify. Because that's the other challenge with going to investors is they're like, with interest rates, inflation, the uncertainties of the market, they don't want to just invest in one deal. And they don't want to put all their eggs in one basket. So I think
Exactly.
allowing in that opportunity for a diversification, still in the real estate, they still get all the same benefits as if they own the property, taxes and stuff. But it's kind of they're looking at it as a mutual fund for real estate, and so that's we're seeing a lot of at least from the raising capital, which makes it easier then for me and the operators to go and deal with the banks because the banks are creating, they're tightening the purse strings a little bit. So there's a little bit more things that we have to, little hurdles to jump through. And um, I wouldn't say barriers, but, they want to make sure that we're capable of doing what we're doing. Um, the other thing that we're also looking at and having some success is looking at some smaller deals to where I call it mom and pop, but where it's kind of just a older, couple that they own, smaller multifamily, maybe 10 to 25, 30 units.
Mm-hmm.
Want to retire. Kids don't want anything to do with it. They want to sell, but they don't want to go through a broker because they don't understand the whole commission thing. And so I've worked 2 deals here in the last year that we've able to generate some owner financing or some carryback from the
Sure.
owner, which it works in their favor. One is we get to keep the broker out of the deal, work directly with the seller. A lot of times it's less money we have to bring. We may not even have to bring the bank with us. They may hold the note. We just bring a down payment. That's typically smaller than what we would need on, a traditional purchase. And plus, the win for the seller is they get to kind of spread out their tax burden over a couple of years instead of taking that large capital
That gain
gain
all at
on
once.
whatever their
Sure.
profit at once. So, it ends up, it goes back, like you mentioned, is problem solving is, how do you create that win-win? Talking to folks, what do they want in their deal? And that's, I've won deals in the past that I didn't have the best offer, like dollar amount, but I had the best terms because I took into account what the sellers were wanting to do, whether that be a fast close. More than likely, actually, it's been a delayed close. They're like,
Mm.
"Hey, I wanna sell it. I'll sell it to you now, but I wanna wait till after the first of the year to sell because, my taxes or whatever," and that may be, 4 or 5 months down the road. So if you can maintain that flexibility and again, problem solve, that's
Sure.
a number of deals out.
Absolutely.
So
Yeah, I just got somebody brought a deal to us yesterday from in Idaho, and the broker told me, yeah, the seller, she's saying she wants to, she's open for owner financing, like 100%, but at 12%. So I was like, had to think about that for a minute, right?
yeah.
Because most are hearing like, okay, well, that might be the going rate on the large commercial property in Idaho. So most of now with when the higher interest rates jumped, a lot of other people doing owner financing are like, okay, well, I can just get 10%, yeah,
More.
9 to 10% easy because people are getting a better deal with me for a portion of it. So that's good. Thanks for covering a few of those. And like you said, the diversified fund. Yeah, I'm reading that Tony Robbins book, that latest book of his called The Holy Grail of Investing.
Mhm.
And he covers, I think the Holy Grail goes around, private real estate, private equity, and private credit is sort of the 3 areas. And he talks about diversification and how something that I notice, and I'm not smart on investing in stocks and stuff like that at all. I think I'm really real estate focused, but he talked about non-correlated investments in diversity. And I think that what I've been thinking lately is that you could do that within a real estate portfolio
Mhm.
so things don't go up and down. Because when you look at these public REITs and stuff that are they're basically, real estate's supposed to be a diversification, right? They've said historically, make sure 20 to 30% of what's in your portfolio is real estate along with your stocks and bonds or whatever. But now that you have stocks and bonds are becoming more correlated, at least the last times they both dipped, the same thing with REITs, with public REITs, because they're almost like over diversified, right? These large super funds, they don't need to make a lot. They're like, oh, we did 9 or 10%. And they're like happy with it because they're making just tons of money every year, right? If you have $1 billion, you could just keep making more money and you have a lot of mouths to feed. So you're out there just doing deals, which, and I think that not enough attention is being paid to the correlation within that. So the public REITs are actually going down the same time stocks go down. So it's becoming more emotional based, where typically illiquid real estate is not.
Yeah.
So real excited to talk more to you about diversification on the creative financing side with a fund, and then, like you said, the owner taking back some in the form of note. That was like the first lesson I learned from Carlton Sheets in the 90s when I had no money at all, and I was like seeing this guy in an infomercial, like, hey, get on the phone, find out what the seller's needs are, and if they're willing, why are they selling, and if they're willing to take back some. And so it's still working. You've put it into use really well lately, as you just said. So
I
that's
want
awesome.
to touch, you brought up a really good point, talking about REITs. And, I've had, and actually in the last couple of days, I had 2 conversations about REITs with some potential investors. And, a lot of investors out there love REITs. And I think, and the commonality seems is because they can be in and out. But after talking to them, what people don't realize with REITs, and you said it, right? They have hundreds of millions, billions of dollars into these REITs. And, it's quantity versus quality, versus like what we're doing, smaller fund, in case by case, we're looking for quality, not quantity.
Exactly.
And so, because we're looking for, we're not going to be happy with, our investors just getting a 9%, annual return. We want that, 18, 20% that we know is out there from previous performance. And yeah, so, just people need to realize it's just, yes, REITs are great. You can be in and out, but, if you're really looking for, long-term, wealth gain, I'm not a huge fan of REITs anymore because of that. I'll go and put it in a mutual fund and can get the same returns as a REIT.
Might as well have it in an index fund if you're going to put in public. And I
Right.
say that while my original vision was being a large REIT, the Froggy REIT, we were going to be safer, kinder, friendlier living with a very specific plan to grow my own mega empire. It's at some point you get diminishing returns. You have flexibility to just get deals done, but does your underwriting start suffering because you have to keep buying, right? No matter what, you have to. So anyway, well, you and I can pontificate that as we select the assets for our upcoming fund. I really appreciate you coming on early, being essentially our first guest on this kickoff of this new podcast format. I'm going to restart the podcast for Patriots with just military veterans. I'm putting you on the Froggy Five this time. We may go back to the other format later with you as well. You're such a good guest. So I appreciate you taking the time, Colby, and I'll talk to you next time. Thanks, man.
Thanks, Jim.
Hey, thanks for having me on. If anybody else wants to find out more about what we're doing, please come to froggycompanies.com. Check out our 3 different business areas. We also have the Froggy Fund I that's now open for up to $18 million. We're going to be investing that $18 million across a diverse number of assets, cash flowing and ground up. And I'm really excited about this fund and really confident that we can outperform most of the other people out there in terms of what we invest in and how we do our due diligence and the type of partners we put together. So it's great talking to you, and see you next time.